The pound has fallen against the dollar, dropping below 134 due to a combination of surging UK gilt yields, with 30-year, of course, rising to the highest level since 1998, deepening fiscal concerns and political uncertainty following a cabinet reshuffle in the UK by Prime Minister Keir Starmer, which raised investor fears about the sustainability of UK public finances and the risk of tax hikes over spending cuts, both of which could of course, have a negative impact, negative effect on UK's growth. Combined with persisting UK inflation and the Bank of England's reluctance to cut interest rates, this has, of course, undermined confidence in the pound. And also, we had a US dollar that was stronger yesterday, just ahead of the NFP report yesterday, which appears to have also added some pressure. The price action appears bearish. Okay, we are trading in a downward channel. We have failed to break outside successfully, and we have also lost resistance at the 133.86, which remains a very important level, along with the 133.64. And currently, we see some sort of flatness on the RSI, which suggests the potential upside, but not, because there is no angle here. We see a flatness, probably just a short term sort of bull rally towards the 134.46. To be more precise, we would be looking the Fibonacci 50%, I would guess. I would prefer to see a three-wave move up, 38.2, 23.6, and then 50, and from there start looking for shorts. This move to the downside, the failure to break above, has also, just for those who love technicals, has also invalidated a potential inverse head and shoulders pattern, guys. Okay, typically the shoulders have the same distance, to the head, and these, of course, could still be considered a right shoulder by some, but I think there's higher chances of a failing pattern here rather than anything else. So what I'm looking at currently is a potential move up to the 50% and further continuation to the downside to the number one. We use the Fibonacci. The assumption is that we're going to get to the 50. It's not sure, but we want to see whether there is any confluence here. And judging by how close the 61.8 Fibonacci retracement of this leg to the upside and the Fibonacci extension of this leg to the downside using the 50% pullback brings us to 133, around that, right? Then to me, it appears that there is a good likelihood that we're going to see a pullback up to around the 50%, because this would bring prices at a level, structurally speaking, that the golden cluster is around 133, and the 100 Fibonacci extension and the 141 extension bring us to the 78.6 and the 100% full reversal. Okay, so these levels are important for us. Okay, so the idea is initial target at 61.8, around 133, just above 133. Secondary target 132.20 or so, with of course a break even, when we reach to the 61.8, which means you can move your stop to the entry once you take the initial part of your trade. Now, just want to go down on the 1 hour a little bit to give you a little bit more context. Okay, as you can see, there is some sort of divergence on the RSI, okay, over here building, very short term, and it might be insignificant, to be fair, because we also, during a high sort of volume trading session during London. But what I'm looking at is that this could potentially lead to a move to 38.2. That could see a small retracement to 23.6, and then a potential move all to the 50%, up to the 50%. It is important that we remain below the 144.45 swing, because if we do cross above that level, heading towards higher highs, then we could eventually take out this high of the high momentum bearish candle, and that would probably mean that this is probably a down move. So what I would be looking is something like this. Okay, that would be the ideal scenario because we have an extended move to the downside that looks like a 5-wave impulse. We want to see a 3-wave move to the upside. Okay, since this leg has already brought us up to around 133.90, you know, we have two potential scenarios here. One will break higher and we head to either 144.12 or 144.40, and then we move lower down, or we're going to see a rejection here because we do have a strong level to deal with at around 133.90. We currently have turned that into resistance. Okay, so this is the one, two, third, fourth time we're attempting to break that. The fifth could be the one that is going to uh, do the trick, if that makes sense. So I'm personally interested in shorts still up here. But for intraday traders, those who are wanting to see um, to take the chances with a potential bull run towards the 134.37, I would be really paying attention to what happens around the 133.89. At the end of the day, let's not also forget that this um, is going into a shorter term bearish move that begins from the top to, well, actually, that was the first initial move. So you see, we've come down to the first leg, move to the upside, coming all the way down here again. So what I want to see as well, I want to see where the 50% lies. The 50% comes around the 133.96. So if, I repeat, if price action fails to cross above the median line, that could also add bearish pressure. Bearish pressure initially, right, before we break 38.2, won't necessarily mean that we know we are going to turn lower, but it could be a consolidation that is either going to lead to the up to further upside or downside because we're ahead of the NFP, right? Um, or it could lead to a breakout higher. And of course, regardless of what's happening with the UK, today we might see some volatility ahead of the NFP in the pound due to the political developments. But tomorrow is going to be mainly based, the direction will be mainly based on what's going on with the NFP. Regardless, though, still, I think that NFP move is going to be temporary for the pound because to me this looks like problematic. The political developments in the UK actually do look problematic, which means they could weigh on the pound in the short term until at least we see some sort of, some announcements that they bring confidence back to the UK markets.